Welcome to my $100,000 stock experiment, Sell Rules, week number 48, ending March 8th, 2019. I'm sharing my stock journey as I practice and develop my sell rules. This isn't an endorsement to purchase any stocks that I bought, nor an endorsement to purchase stocks in general. I'm just allowing you to follow me along on my journey. These are my sell rules as of week 48. They're basically the same as last week, but I reformatted them a little. I use stop limit orders to set a floor, and my maximum floor is 8% below the purchase price, which I typically set when I purchase a stock. Other options are the 28-day exponential moving average or the 13-day simple moving average. I revisit that floor once a week, and I can move the floor up, but I can't move it down. So if I move it up to the 13-day simple moving average one week, the next week I may choose to leave it there, or I can continue to move it up. And I like my stocks to consistently be gaining a minimum of 0.5% a week. This was a rough week for stocks as far as I'm concerned. The S&P had 5 down days in a row. It closed below its 200-day moving average, which is the white line, and it has come up and hit the area of resistance that I identified, 28.17, 4 times. The VIX, which I like to see below 16, also closed above that mark and had hit as high as 1812. This one, the lower the better. And the floor was triggered for 6 of my stocks, so 75% of my portfolio sold. Here's a bar chart for the stocks that I sold this week, and you can see that each of them dipped on the week of 3/8. So I did sell all of these for less money than I was holding last week, but that's just how right now my sell rules work. By having sell rules at the moving averages, I'm trying to sell near the top, but not at the absolute top because I'm hoping that this will allow me to capture more gains for other stocks that may not be topping. I'll evaluate this in a couple of months and see if this is really working for me or not. And I put these in order of the best gain to the worst gain. Number 1 is actually a loss. Number 5 and 6, even though Kirkland Lake Gold gave me more money, it took longer to get there. So it's very important how fast you can get to your return. So CyberArk, for the time period that I held it of 6 weeks, actually gave me a better return than Kirkland Lake Gold. Now I'm going to review the charts, weakest to best in terms of the ones that I sold. HubSpot, I held that for just over 4 weeks for 21 days, and I lost $165 on it. It was down 2%. Square, I sold on March 4th. I had held that for 8 weeks, and it was up 18%. I had a gain of 1,825. Zen, I sold on March 4th. I had held it for 39 days. It was up 20% for a gain of 2,027. Many of these stocks I would consider buying again. So I'm going to keep an eye on their chart and see if they get to another pivot point, and then I'll make another purchase. IIPR, I held that 27 days and it was up 15% for a gain of 1,516. Kirkland Lake Gold, I held for 61 days. It was up 37% for a gain of 3712. Last week it had been at 48%, but since I had my sell rule at that 28-day exponential moving average, it fell a bit before it sold. And the best performer in the group was CyberArk. I held that for 25 days for 5 weeks. It was up 21% for a gain of $2,096. At the end of week 48, I have a cash balance of $101,818. My current holdings show that I own 2 stocks, ADP and CTRE. CTRE wasn't performing well last week, but it has recovered, and ADP went down from last week. Here's my current dollar gain sorted by the loser on the top. ADP, I have a gain of $57, and CTRE, I have a gain of $577. This is the percentage change for the week. ADP dropped 3% this week, and CTRE went up 4% this week. I'm going to review the charts for my current holdings, weakest to strongest. I only have 2 stocks now, so the weakest one is ADP. I've held that for 19 days and it's only up 0.5%. I did raise my floor up to the 28-day exponential moving average, and the current price is very near that, so I would not be surprised if this triggers a sell this coming week. And CTRE, I've held that for 28 days and it is up 6%. And I raised my floor to the 28-day exponential moving average. And my industry breakdown shows that I have 2 stocks in 2 different industries. Last week, I had held 8 stocks in 5 different industries. So I sold off all my software, my mining, and my finance. I'm showing the weekly tracker of my current holdings going back to August 24th. In August, the stocks were performing well, and I ran into trouble in September. The week of September 7th, I had 10 stocks, and then the week of September 14th, I only had 5 stocks. They had triggered sell rules, and I sold. And then I started to buy stocks because I had some cash, and my winning percentage started to go down. I have that winning percentage highlighted in pink for weeks where it's less than 70%. I used to have it set at less than 50%, but I think when it starts to go below 70% of my holdings that week, then that's an issue for me. I really had an issue with that winning percentage up until mid-December. This pattern looks like it's repeating itself down at number 2. On February 22nd, I had 10 stocks, then I had 8 stocks, and now I only have 2 stocks because all the rest triggered sell rules. And then here's my sold position. So the week of 3/8 down at the bottom, I sold 6 stocks. 5 were winners, which is awesome, and 1 was a loser. My largest gain was 3,712, and my largest loss was 166. Number 1 is showing in September, October, and November. I was doing heavy selling, highlighted in yellow, and then the red ones, I had very few winning trades during that time, so I was just selling losers. And number 2 is showing that many of those losers were over an 8% loss. The same thing down at number 3. Lots of selling, very few winning trades, and several losses more than 8%. Down at number 4, you can see I'm containing my losses to approximately 8% or less. And then number 5 is showing that the stocks that I'm selling, at least I'm having winners as opposed to losers. This is my benchmark against the S&P for the same time frame, and I highlighted that area in red, which is from September 21st to January 11th, which was a difficult period where I could have done better both with my sell rules and implementing some buy rules. So I don't think that it was necessary for me to take that big dip. And if I continue to do this for another year, I'm expecting that I won't see this kind of big dip in my portfolio. Week 48 still ended with a 22% gain versus a 3% gain for the S&P. But my portfolio did go down approximately 4% for the week since last week, while the S&P only declined 2%. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel. Don't forget to hit the bell if you want an alert when I post a new episode.